I just love lifestyle, finding ways to enhance lifestyle. Hence the name of my book and my podcast, Lifestyle Investor. And for me, it's not about being an investor first. It's about really like creating this great lifestyle that is inspiring, that creates passion. I used to tell people I was a business owner, but the truth is my business really owned me. I was spending more time than when I, was quote unquote working a job. I was able to make more because of it, but I was just on a fancier treadmill, right? I was still on the hamster wheel. It's just an upgraded version of a hamster wheel. I really want to live a life that is not a materialistic life. So I'm not trying to get more stuff. I'm trying to gather more memories and experiences. And so I love spending money on travel, on, cool events, on, things that my friends and family couldn't afford themselves or maybe didn't have access to.
Hey there, and welcome to another episode of the Jack Bosch Show, where we talk about all things real estate, cash flow, finance, entrepreneurship. And today we're gonna hit the niche of cash flow with my guest, Justin Donald. Justin, welcome to the show.
Thank you. Great to be here, Jack. I love talking all things cash flow. So I think
there we go. Me
fun.
too. I even wrote a book for Forever Cash, Wealth Philosophies, things like that. So when I had the opportunity to have you come on the show, I jumped right on it. Now, here's the one thing. There's two favorite people in the world. One is my wife. Well, three people. One is my daughter, and the fourth one is Warren Buffett. Now they call you the Warren Buffett of lifestyle investing. Tell us all about that. How come that you got that nickname? What does it have? Well, why? Let's just jump into it.
Well, it's a generous tagline that Entrepreneur magazine gave me. They did an article on me a number of years ago, probably 6 or 7 years ago now. And they thought the stuff that I was doing with cash flow investing was so different and foreign from what they've heard, from investing in a traditional sense. And they, I guess wanted to give me, a catchy tagline that kind of tied me to being an expert in the area of cash flow investing. And so for me, I just love lifestyle, finding ways to enhance lifestyle. Hence the name of my book and my podcast, Lifestyle Investor. And for me, it's not about being an investor first. It's about really like creating this great lifestyle that is inspiring, that creates passion, that, has impact. And it's something that, it's a great life that you want to live. And I love helping people buy their time back. And there are a lot of ways you can do it. I just found the easiest and fastest way for me was buying cash flowing assets that produced more income than what it cost me to live. So then I don't really have to work. I get to work, right? So it's not like I'm going to sit around sipping margaritas all day, sitting on a beach like that. That would be boring within, weeks. But I'm inspired to work a schedule that I love. I'm inspired to have roles and responsibilities that are fulfilling. And I'm an eternal student. I love to learn. I love creating communities and facilitating education and deal flow and teaching people how to invest and tax strategy and all the things that billionaires do that my goal is to democratize so that your average everyday person can do it. And especially, those that have had some business or financial success can really take advantage of.
So how did you build that lifestyle business or lifestyle investor life for yourself? What asset classes did you invest in? And what asset classes did you invest in perhaps that you don't recommend anymore? So that's just as important, what not to do. So tell us a little bit about your story. How did you build that life? And then subsequently, now what are you telling others to do?
Yeah. So, I got started in real estate. I'm an entrepreneur that started a business early on. And, I used to tell people I was a business owner, but the truth is my business really owned me. I was spending more time than when I, was quote unquote working a job. I was able to make more because of it, but I was just on a fancier treadmill, right? I was still on the hamster wheel. It's just an upgraded version of a hamster wheel. And I just had this realization when I was working one weekend, and this was many weekends in. My friends wanted to go out. They, were giving me a hard time because I was still at the office late on a Friday night. I was going to be working on Saturday. And I had this realization that, this season of life, I'm okay learning these skills and I'm okay being where I am, that I'm working hard. But in the next season of life, when I'm married and when I have a family, when I have a daughter, I don't want to be on that same treadmill or hamster wheel. I don't want to be in the grind the same way. I want to be able to, be home for family dinner every night. I want to be able to not work on the weekends. I want to be able to travel when I want and work when I want. And so it was really kind of then that I said, well, I've got to, I've got to separate this whole thing of like, I either need to get really good at systems on the business side of things, which I did get better at systems. I need to get really good at hiring the right people so I can plug people in to do those things. But ultimately, I need to move over here to this investor quadrant. I need to figure out a way to get my money working for me that is totally independent of time. And so I started studying all the different asset classes out there, ways that you could buy and sell businesses, start businesses, which, today I would tell you I'd much prefer buying a business than starting a business, though I learned the hard way. And then I started looking at all the different investment asset classes and landed first on real estate and started investing in mobile home parks. So that was kind of like the first iteration of our financial freedom. I bought one mobile home park that replaced my wife's income. She was a teacher at that time. She retired. We had our daughter then, and she never had to go back to work. She helped out with the books periodically in that business for a period of time. I kept buying more parks. The next park I bought covered our survival income. So it wasn't yet lifestyle, but it was all the basic needs, right? Utilities, car payments, mortgage, all that. And then I bought another park and that covered our lifestyle income. And from there, 100% of the investment purchases or investment capital expenditure went into surplus income, money above and beyond what it cost me to live. So instead of being, in this rat race of trying to save 15, 20% every year, once you hit surplus income, you're saving 100% of that money. And it's either going to impact or wealth creation. And now there's ability to like accelerate the compounding of your wealth and of your passive income.
So at that point, were you tempted to upgrade your lifestyle? And if yes, did you, and when did you?
Yeah. So was I tempted? Most certainly. I had friends that were doing cool things and I thought it'd be really neat to be able to do those things. But I thought the better move at that point in time, it wasn't like we had a horrible life. We had a good life. We had a good lifestyle. There's more that maybe I wanted, but I thought I can wait till later because if I can just keep stacking this surplus income, I can really compound our returns. So we just started putting everything into new investments. I lived on the same income for over a decade without increasing our lifestyle. Or if I did increase, it was like just teeny tiny,
a little
bits.
nicer
Maybe
vacation or something
upgrade
like
it.
that, or a
Yes,
little nicer
exactly.
steakhouse instead of the diner around the corner. You go to like
That's
a nice
right.
steakhouse, stuff like that.
That's
Yeah.
right. And so, marginally, maybe we spent an extra 10,000 a year, but nothing that was going to really impact us negatively from the investment goals that we had. And so I started diversifying into other real estate asset classes. I got into multifamily and self-storage and industrial. I got into private credit. I started lending money to people. I started putting money in these hard money lending funds that were more institutionally run. So they were better than what I was doing on my own. And the goal was just to continue upgrading the sponsors that I worked with, upgrading the investments that I did, higher quality deals, higher experienced sponsors, and just trying to find ways to level up and get ahead.
And by the way, it's that I'm just nodding here because that's exactly how we did it too. When we discovered our land flipping business, in 2000, end of 2002, we had just bought our starter home in 2021 as a job and while having a job and so on. And we lived in that starter home in that 16 or 1800 square foot, 3 bedroom, 2 bath home that I bought for $151,000 back then. We lived in that thing for till I think almost 2010. And then we moved to the beautiful 5,000 square foot semi-custom home with two staircases that go up and things like that. And we upgraded our lifestyle. But even like 2006 or seven, I think I remember still driving a Toyota 4Runner, which by the way I still own to this day. It's like
It's
2004
great.
Toyota 4Runner. My mother-in-law drives it because that's 200,000 miles. Um, um, But we drove a little old beaten up car, and we just looked like the neighbors, like everyone else in the neighborhood. But in the bank, we were piling up when we were buying houses. Then in 2008, 9, when the market crashed, we started to buy houses like crazy and things like that, and really building that generational income, the generational wealth, instead of just building it for consumers. And then once we hit a certain level, then we're like, okay, so now let's upgrade. And now we live in a 7,000 square foot custom home and do the big trips and things like that. But it's all taken care of now. It's that lifestyle. I agree with you. Now, where do you go switch from lifestyle to generational wealth? Is that something that you look out to, or is it all about lifestyle?
Yeah, so it's a combination of both because I really want to live a life that is not a materialistic life. So I'm not trying to get more stuff. I'm trying to gather more memories and experiences. And so I love spending money on travel, on, cool events, on, things that my friends and family couldn't afford themselves or maybe didn't have access to, and being able to help them live out some of their dreams. So like to me, that's living and that's helping other people live an epic life. And so that really is kind of where, we go. Now, we're in a position like you where we have, we're kind of forced into the generational wealth question and what does that look like? And I've got strong feelings on certain aspects of it, and other things I'm just curious. I want to keep meeting more people that have done a great job with it because I've found that money is a great corruptor if values and skill set are not strong in the inheritors, right? So I do think that there's an aspect of education that needs to go along with it, and disciplining certain foundational, fundamental values that are family values that matter, and that work ethic needs to be there. That we need to do whatever we can to eliminate, any sort of entitlement. And so I think we're still on that journey, and we're still figuring it out and figuring out what at the end of the day goes to charity and what at the end of the day may go, back to the family, heirs, people like that. Warren Buffett, since he's one of your favorites, he had a really great saying that was, he wanted his kids to be able to do anything. So they need to have enough money to be able to do anything, but not enough money to do nothing, right? And so
Right.
there's a sweet spot in there that I think I want to help figure out what it is. And I'm 100% positive that a lot of the wealth that we have created and will continue to create is going to go for good in the world. That no one else is actually going to be able to own those dollars. But we want to set up, we have trusts and everything, and we want to set things up that in the event that our daughter has a passion that is a low income generating passion, that she's able to do that passion with some form of support, and doesn't have to be worried about moving up a corporate ladder, or doesn't have to worry about, if she wants to be a teacher, or if she wants to be an artist, that she can do that and not feel like she's going to, be poor or homeless because she can't make the money she needs to make, especially in the early days.
Yeah. I agree with that. I agree with that. We're very similar thinking about our daughter. However, I think I have a 17-year-old daughter. Actually, by the time this is coming out, probably 18-year-old. She turns 18 in like a couple of weeks, or actually next week.
Amazing.
And she's very, very responsible. She's very much interested in finance. She's very mature, and and she wants to join the family business. So in our particular case, which is, I think, a little different from Warren Buffett, obviously different in category, like 150 billion to whatever we have built, that the principal, Warren Buffett's kids never really learned what he is doing, or
Right.
so. I think his son is actually quite successful with farming and things like that. So it is not just a farmer. He owns, like, I don't know, thousands of acres, and is a really mega successful farmer. Um, but in our case, what we're thinking is, at some point of time, and I think that's at some point of time, I want to build more than just a lifestyle business for myself. I want to build a platform for my daughter to be able to stand on. Now, some people might say that's nepotism, but on the other hand, why would I not, as a parent, want for my daughter to have the best possible way to build on top of what we have already built? Like
Right.
anything else would be in my mind. Anyone else like that, like if you look at the Latin American culture, my wife is from Latin America, from Honduras, and parents, and if you look at India, if you look at Asia, parents bust their balls for the kids to be able to step on their shoulders and have that better life. They come to this country,
Yeah.
work 17 jobs in order for the kids to go to Stanford and the kids to become a doctor. And then from there, their kid, they do the thing for the next generation. And a lot of these, let's say, second and third world countries have that kind of spirit. Yet for some reason in the US, we're like, no, I'm going to burn it all and my kids can see how they can live alone afterwards. And I'm not of that opinion. If my daughter wants to, I don't want to bring up somebody who is like a useless, non contributing member of society and just basically drinks margaritas because they're a trust fund baby. But I understand that point. But I'm thinking, so as we have been building our wealth, we've been consciously thinking that we're building a platform for her to be able to use that and to even take a step further up. And how do you see that in your life? And how do you see that from your point of view of like cash flow business? Because the one criticism on a cash flow business is when I hear it makes sense when you have the assets. That's why I was asking that. Because I know a lot of people who basically have cash flow lifestyles. But what their cash flow lifestyle means is that what they do while, let's say, being digital nomads just covers their bills of being traveling around. So they're living an amazing lifestyle. But if they get sick or anything happens to them, everything comes crashing down and they have nothing to follow. I'm very
Yeah.
glad you mentioned real estate as or businesses as something that runs and that pays for your lifestyle, because these are sustainable assets that if you get sick, the park, the mobile home park continues to operate, continues to bring in cash. So where do you see yourself in your opinion about this, like generational wealth from that point of view? Building a platform for the next generation, does it make sense? Building this beyond your lifestyle needs. Why would anyone build below the lifestyle needs? What's your thinking about those things?
Jack, I love this question. I love getting in the weeds on this. So I have a couple of thoughts on this. The first one is if my daughter wants to work in the family business, the family office, I would be thrilled. I'd say right now, we're at a point in time where I'm not sure that I see it yet. I don't know one way or the other. It would be the greatest gift if that's what she wanted to do. I actually see a more likely world that she might work in the private foundation world that we build and help run that more so than the family office. Although I'd love to have her in both, I think that'd be great. But we have an incredible team of people that really run our businesses. And to answer your second question, I'm very careful about the investments I make. Meaning, and by the way, I am on many levels, but meaning from a lifestyle standpoint, the last thing I'm going to do is buy a company. I've bought tons of companies. All right. The last thing I'm going to do is buy a company that doesn't have an operator or doesn't have a bench of other operators, or I don't have an operator I can plug in where there's danger that I can be on the hook of being the operator, right? So the last thing I want is to invest in a company when really what I'm doing is buying a job. So that is the last thing that I want. And so we run all of our businesses with an operator. There's at least one, if not several, in every business that we have ever purchased, every business we have ever started. And then when we invest in LP interests, often we'll get GP economics based on the size check or whatever preferred terms we negotiate, especially inside of our lifestyle investor mastermind community. We're aggregating a good amount of funds that gives us preferential treatment. I want it to be with operators that know what the heck they're doing, that are very seasoned, have a lot of experience, have weathered downturns in the past so that I know they know what to do. And I know that our capital is going to grow over time. And so, I would love to have an opportunity to bring my daughter into all the things that we're doing, but I also don't want to force that in case
Of
her
course.
gifting puts her somewhere else, and I want her to be able to do that. And my daughter's a dyslexic learner, so and I had the luxury of spending time with Richard Branson on Necker Island for a week, and he created a video actually talking about how dyslexia is a superpower. A lot of people look at it
Yeah.
as a learning disability, and he said it's the greatest superpower in the world. And I think most people
Uh,
who don't
I'm
know,
dyslexic too.
you are too. I love
Yeah.
it. So I think most people that don't know what the career paths are for dyslexics, it's generally four categories. They're either architects, engineers, fashion, any form of like artist, fashion, and entrepreneurs. And so I'm hoping that she falls into the entrepreneurship realm with a desire to kind of do some of the family business stuff. But based on early signs, she may fall into the realm of like fashion and art. And she is very
How old is
gifted.
she?
She's 12. She's been making her own clothes since she was 6.
All right.
She makes
That's
jewelry. She
commitment.
paints. She does pottery. I mean, she literally can make anything. It's incredible. She has a mannequin that she actually like makes clothes. Like sews
Yeah.
clothes and makes dresses, and it's really incredible.
Well, you know what I noticed, and we'll get back to the main subject, even though this is the main subject. What I noticed is that actually my daughter has a very artsy touch. She loves art since she's little. She scolds us if we get her out of a museum too fast. We like spend less than an hour in a Picasso museum. She's like, "You guys shoot me out of the museum." And to her 60th birthday, she didn't want to have a car. She wanted a piece of art.
I
So
love it.
anyway, so she got her
So
piece of
cool.
art and she loves it. But the point is that what I wanted to say is that we told our daughter, like, you can do anything in life you want to do, but you got to understand business. And
Mhm.
as she looks into art and art curation and art management and art things like that, and like combining business and art, she we also realized that all the best artists in this world have been really good marketers.
Mm,
Like there's the Van Goghs of this world that obviously didn't sell a piece of art in their lifetime because they were horrible marketers. But you look at the Warhols of this world. Andy Warhol was a fantastic artist, but he also made sure that everyone in town knew who he was. He made
yep.
sure that he attended every single party. It's known that he attended up to 5 parties a night, only showing up for 5 to 10 minutes per party and shaking as many as 50 hands during that each party in order to just network. But he's like, oh, artist is here, Andy Warhol. Well, who is Andy Warhol? Let me look up his art. Oh, his art is cool. Let me buy some art. That's art. That's art propaganda. That's art promotion by just
That's
being
awesome.
visible and being everywhere.
Yeah,
And that's a marketing That's marketing principle.
that's
That's
right.
not different than Sydney Sweeney or something being wearing the jeans and having a provocative advertising out there, and that got everyone to talk about her. And whether those jeans are good jeans or not, everyone's attention is now on the jeans, and everyone's attention is on that American Eagle store. It's the exact
Yep.
same business principle. So that's why I was saying, like, you can be an artist, you can be a fashion designer, you can be an art gallery owner, but if you know marketing and if you know finance and if you know entrepreneurship, you're going to blow that thing up and you're going to have the most successful business in that area. And that's what I
Yep.
mean with pulling her into the business. So we simply say, like, you study whatever you want, but you got to have a minor in business.
I
And
love that.
but
That's
going
great,
back to
Jeff.
the going back to the lifestyle piece now. So um, if somebody is starting out and just like, okay, has a job, has perhaps a decent income, doesn't live above their means, doesn't live a crazy lifestyle. It's not like all the Gucci, Versace left and right, and just lives the Instagram lifestyle. There's nothing to show for, but lives a normal life. How can they get started? What can they do to actually start building that lifestyle income, that start becoming a lifestyle investor based on your definition? Because that's really
Yeah,
what probably 90% of our audience here is.
that makes sense. And it's probably about, 80, 90% of our audience as well. Inside the lifestyle investor, we'll get inside the mastermind community, we'll have a lot more entrepreneurs, but inside of the greater, network of podcast audience and email list, I would say that they're pretty similar. I would just say figure out what you want. I think having a compelling vision of the future, with clarity on what you want is step one. So what are your goals? What are your dreams? What does it look like a year from now, 5 years from now, 10 years from now? And really get clarity on that. And then from there, figure out the ways that you can get there. And I think if you have a job that you love, that's a lot different than the job that you despise. And so, figuring out like, am I trying to get out as fast as I can? Or do I like it? Am I good at it? And I want to keep, kind of moving up. So there's going to be this like moment of decision on, do you want the best returns you can get, or do you want returns with the least amount of time? And that's where I think you're going to find that some people are going to say, hey, I got to hit the exit, the exit button as quickly as I can. And I either need to leave my business and go start a business or buy a business or go all in on real estate where they own the deeded property. Or the flip side is I'm okay where I'm at. Maybe in 5 years I'll feel differently, but right now I have cash to invest and I don't have the time to commit to it. So maybe I'm finding LP limited partner deals with really strong sponsors that run the deal. Maybe it's real estate syndications, maybe it's private equity syndications. We specialize because we're looking at what single family offices do. And ultimately, what a single family office is an office that manages the money for billionaires. You can have a multifamily office, which is generally for millionaires, usually at 50 mil plus, sometimes 100 mil, depending on the size of that family office. But we found that in our research, about 50 to 60% of the net worth of the billionaire class resides in alternative investments. So
Right.
real estate, private equity, private credit, and Bitcoin, being the four main categories. There are some subcategories. And so I think that if you're starting in one of those areas, you're going to do really well. And if you are going to
Okay,
be,
give us those four again.
yeah, real estate, private equity, private credit, Bitcoin.
Okay.
And if we're breaking down like a pie chart, I think most people think that the wealthiest people made their money in the stock market and they have all their money in the stock market. And that's not true. Usually in public equities, it's only about 15 to 30%. Usually it's even closer to 15 to 25%. If you're looking at real estate, it's usually 10 to 20%. Private equity is usually 20 to 35%. Early stage investments like super risky seed, angel, like pre-seed type stuff, that's only 1% or less. Venture would be a part of private equity and it'd be about 4 to 10%. You've got fixed income, that's going to be 5 to 10%. Cash, which is 5 to 10%. Collectibles, 1%. Infrastructure, 1%. Precious metals, 1%. And commodities like oil and gas, 1 to 2%.
So let's bring
Hedge
it
funds.
back to that average person. So yes, the first thing you need to make a decision on do you want to optimize your income, optimize your returns, and so on. The second thing though is, where do you even start? Because every one of these aspects that you just mentioned, you can make it a lifelong study area. Right?
Yeah.
How do you go about even selecting? And because like if you have $100,000 job as a manager somewhere at a store or at the office and so on, and you, or that's your family income, let's say, and you manage to save 10 grand a year, and you put that in your 401k and things like that. Isn't the first thing you need to do if you want to take charge of that to independencies yourself from your financial planner and actually make your own financial decisions?
Yeah.
But then if you do, a lot of people are afraid. So how do you overcome that fear, or how do you find like if you have 10 grand on the side and perhaps you've done that for a bunch of years and now you have 100 grand on the side, can you get into venture capital with that? Can you get into private equity with that? When you can get into real estate with that, obviously, like we teach land flipping, and come to us, go to landprofitfund.com and just download our 30-day blueprint, of course. But most people listening to me already know this anyway. But all the other aspects are like, how do you get into those if you don't already have millions of dollars and are already not part of a country club and et cetera, et cetera, et cetera?
Yeah, I think most people outsource their financial acumen and financial literacy to someone else, but that someone else they outsource it to is likely undeserving of that position.
And
And
I agree. I 100% agree with you on that.
yeah,
Yes.
I'll just use stats. So over the last 15 years, you've had less than 5% of money managers outperform the S&P 500 index. Over the last 30 years, it's less than 1%. So the problem is the average person allocating to retirement dollars is using someone that they are paying more money for to get a worse return than if they just went to Charles Schwab or Fidelity and invested in the S&P 500 index on their own, the lowest cost way of getting exposure to the stock market. So
Yeah.
that's just one thing to know, which
Yeah.
if you
I
know,
just I
yeah,
picked a few stocks for my daughter, and I also put some money into the index. Guess which of all of those is the best performing one?
the
It's the
index.
index so far.
Yep.
Although I think that might, well, that is always a safe bet, but it's still not. It's still not the lifestyle income bet
Right.
because
There's
so
less
how do you get from
utility.
there to the lifestyle income bet? What is the trajectory that you recommend for people to go?
Well, the trajectory for me was getting into real estate first. And so
Hmm.
that's so when in doubt, when people say, "Well, if you did it all over again, how would you do it?" Well, I do it the exact way I did it because it worked and it wasn't hard and it's not too complex to learn. I just made a decision that I was going to start blocking time where I was going to learn how to become a real estate investor. And then I was going to partner up with and it doesn't mean that we're actually partnered in a deal, but I'm going to partner up with someone wiser than me that has the experience, that has done what I want to do. And I'll either pay for mentoring or I either pay to join a mastermind for peer group access. So mentorship and peer group, I think, is like the greatest place to invest your capital. So you can learn how to do it from best in class people that care about your success and can help you shortcut the learning curve.
And I couldn't agree more. I didn't want to say it myself because obviously people know me as being the owner of an educational business. And of course, Jack is going to say that you need to invest in coaching and you need to invest in things because, and so on and so forth. But the true fact of the matter is if you have these four asset classes and you pick any of them, and I would agree, real estate is a great one to start and make that seed money and make it your, what we call a cash machine, the cash machine that spits out the cash that then you use and invest in other assets. But even as you progress from that to the other, you first got to build the expertise.
Yes,
Like you like the worst thing you can do is fire your financial advisor tomorrow and start blindly investing in stuff.
that's
Right?
right.
That's not what you want to do. Keep your financial advisor, but go pay your buy some courses, go do some watch some podcasts, become an expert, understand what crypto means, understand what it is, understand that it's not just a bunch of people betting that the coins go up or down, but there's an entire infrastructure behind. What does the infrastructure do? What do the all those kind of things? That there's a growing amount of people using it and actually using it as a platform that in order to use it, you got to pay for it. And the crypto coins are being used to actually pay each other for that, for services delivered on that platform. So it's not just a bunch of speculation. There's some speculative coins, of course, but there's some core coins that is actually that's an entire infrastructure behind it of usability. And once you understand that, then all of a sudden that crypto, for example, doesn't become this senseless speculative like the 1960s Dutch tulips anymore, but it becomes something that, oh my God, yes, there's this is not a fad. This is not going to go away, and understand why. And now it makes you confident to actually put some money into it. The same
Yeah,
thing with like private equity. I have an opportunity right now to invest in a company, and I'm not the most experienced in that either. I focus on real estate. I put my money in real estate. Now I'm expanding into this. Well, guess what? I'm talking to people that have experience.
yes.
I'm learning to this. I'm learning how to underwrite that, what questions to ask. I'm watching podcasts about it. I'm listening to podcasts. I'm reading books about it. I'm hiring experts for it. I'm paying people money for it so that I can make the proper decisions and don't just invest in somebody because I think it's a good idea.
Yeah, I mean, I
Right?
think most Americans need to wean themselves off of the stock market. You've heard this old adage of the 60-40 split. You are well diversified if you have 60% stocks and 40% bonds, except for the fact that, in the last few years, it's been the worst performing allocation I mean, to the degree that we have one of those years that it was the worst performing in the last century, 100 years.
Yeah. Wow.
And so I think that we need to get to the point that we focus on what the wealthiest people do, which is weaning off the stock market and into a position that's closer to 15 to 25%, maybe 30% there. And it's interesting because these individuals, they're banking partially on the success of the US economy long term, but there's also the added opportunity to borrow against those stocks to buy alternative investments. So they can use leverage, they can use margin, low risk margin, low percentage to be able to buy other alternative investments that help them build their wealth faster. And that's the reason they do that is instead of selling stock and having a taxable event, they can borrow against it for no tax.
Yeah, absolutely. That makes a total sense, and I couldn't agree with it more. Luckily, I never fell into that trap. I never hired a financial planner. We always invested. We invested in the one thing. Again, a big fan of Warren Buffett. Warren Buffett says the opposite. It's like instead of diversifying, concentrate and watch it. Become an expert at what you do. Put all your money into what you know you can do, and then watch that basket really, really closely. Much more along my kind of lines. And what I understand is real estate and business. So I know if I see a good business owner, if I know I see a good operator, and I know if I see a good opportunity, and most importantly, I know if I see a good piece of real estate and a good real estate model. So that's what we invest in. So with that said, that was fantastic. So now tell us what can we do for you? How can we help you? How can our audience help you? How can they get a hold of you? I know you talked about some masterminds and some things that you have. Tell us how we can help you.
Yeah, well, there are a lot of ways that you can kind of learn what we're up to. If you go to lifestyleinvestor.com, you'll see, all the things that we're up to. I've got a book that became a #1 Wall Street Journal best-selling book and USA Today bestseller. It's now a top 1% of all books ever sold by volume, which is cool. The podcast is the top 1% of all downloaded podcasts by volume, all categories. So, there are a lot of people that have interest in this. All the proceeds from the book go to fight human trafficking. And we're just really pleased by, all the money we've been able to donate to Tim Tebow Foundation and Love Justice International, two of the best groups out there in that space. We've got a high ticket mastermind. We actually have a few different tiers of our mastermind that are application based, and we're pretty critical with who gets in. We have master classes and coursework, and we've got a passive income masterclass, a mobile home park investing masterclass, a tax advantage, helping people with their tax strategy, which I think is one of the most underutilized pieces of opportunity out there for people to reduce their tax bill and be able to invest those dollars instead. And we're just pleased with all the offerings that we have. If you go to lifestyleinvestor.com/roadmap, I've got like a 2-hour session that I did with my COO, Ryan Casey, on asset allocation of the billionaires. And it goes into deep detail on what the wealthiest people in the world are doing with actual data, with a passive income calculator to help people calculate the cash flow in different asset classes and how much to allocate to those asset classes. And for anyone that, just wants like the next step, like what do I do next? Here's where I am today, but here's where I want to go. We do these strategy sessions. They're $500 a person. But for your audience, we'll just do it for free. So truly pro bono. If anyone is interested, you can go to lifestyleinvestor.com/consultation, and someone on our team can basically understand where you are, learn your story, learn where you want to go, and kind of help you with the tools to get you to that next place.
Awesome. Very much. Very cool. Thank you very much. I really appreciate that. And guys, go there, lifestyleinvestor.com/consultation or /roadmap. Get the book, get the podcast, check it out. And thank you very much for being with us today.
Yeah, thanks, Jack. This has been really inspiring conversation. I appreciate you having me on.
Thank you for being with us. So lifestyle investor, lifestyle investing, that lifestyle business, that owning that lifestyle business, having assets that produce cash flow for you to live the lifestyle. That's literally what Michelle and I had set out to do when we came to this country and when we started discovering the wealth principles of the rich. I always like to say, like, I grew up in Germany, and there in my town over from my house, from my parents' place, there's a little castle. And in that little castle, there's the Graf von Bodmann sits there. And Bodmann is a little town, and the Graf means the count. And the little count, one of his sons went to school with me, or a couple of years above or below me, public school, because the public schools are really good there. And the bottom line is, he became the new count when the old count, I think a few years ago, passed away. And so he sits on his thing, and what does he do? Well, guess what? He is the true landlord. He owns 80% of the land surrounding that little village, and there's apple orchards and cherry orchards and farmland and all these kind of things. So essentially what the family does is they have, over the generations and centuries, bought more and more and more land, and they're operating that land, renting the land, and living a generational, multi-generational, even multi-century lifestyle. And this is the ultimate kind of show that you can, if you do this right, you can actually build this not just for yourself, but actually for multi-generational, which is something that is deep in our, close to our heart. So with that said, thank you very much. And you guys, that's a wrap. As always, give us that 5-star review, tell your friends about it. Again, check out lifestyleinvestor.com/consultation or lifestyleinvestor.com/roadmap. All right, bye-bye.